All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and today is Monday, the 13th. So, a little bit, I would call, I use this phrase too many times, but it's kind of the best way to explain it. But I would say a bit of a tricky day, right? We came into today, Sunday night, futures were down. Everybody's talking about Turkey and the big currency moves, not only in the Turkish lira, but also in the South African rand as well, which is highly correlated to the most correlated currency to the Turkish lira. So there was some kind of ripple effects going across emerging markets. Asia was lower, Europe was lower this morning, S&P futures were lower, and then all of a sudden, we get this rally pre-market, which brings us up to basically flat going into the day, and then we rally a little bit, and we just didn't have a strong enough push, and sellers came in, and it seems like around this 10:45 to 11:30 mark is kind of where things switch, and we're just in a little bit of a different environment. These reversals have been taking place a lot right now, where we're starting the day one way and we just flip. So it's not every day, but it seems like that's also happening either around 10:45 to 11:30, or if it doesn't happen there, it happens around lunchtime. Sometimes right around you go get lunch, maybe around 12:30, 1:30, and we just fade the rest of the afternoon. So it does look like we were getting a little bit tired in the overall indices. So, and the other thing is, what we talked about last week was the VIX got to a really dangerously low level where there was no volatility present whatsoever. One of the things that I said last week was it could have been a change in the wind that really would have caused a little bit of volatility, considering that we were pretty much priced to perfection when the VIX gets to around a 10, or we almost got into the single digits in the VIX last week. So anything at that point will cause a little bit of a move up. So yeah, so we had a real nice swing for the most part of July. A little bit of a check back to the 20-day moving average. The beginning of August was strong, and now we're coming back in a bit. So we'll see if this 20-period moving average holds. If not, maybe back into here, or maybe back into here. So, the other thing to note is we are now in the middle of August, and these back end of the months have been very tricky. So if you don't believe me, in case you think I'm making this up, but this was something that I put out at the end of, this is the newsletter, by the way, from the weekend. But this was something that I've noted at the end of July, and also at the end of June. I just didn't tweet it out until the end of July. But look at the performance in the last 4 months in the beginning of the month. July was particularly strong, plus 4% in the beginning, but the second half of the month was flat. Take a look at June. June is a good example. Plus 2.7 in the first half of the month. In the back end of the month, minus 2.1%. So, we can come up with theories about this, why the back end of the month has been particularly weak. But, note that the first half of August was up over 1%. So, if you start to factor in Friday and today, I think we're only up about 0.5% month to date. But the Qs, for example, are still up over, I think, about 2% month to date. So, manage this accordingly. So what I said here in the weekend newsletter was, do you sell everything? I guess some people may do that, or do, really trim their portfolio. I don't. I kind of just trim my portfolio and just be careful about how many short-term positions I have. Maybe I do a little bit more day trading, things like that. But I just kind of watch my exposure because, days like this could happen very easily, where we start going higher. I can give you a couple examples of what I was doing today and why it was a little bit of a disappointing day. I've had on a Salesforce trade, which I just went over at the end of the day, where I've already taken. Now, I've managed this pretty well. I'm kind of rough on myself a little bit because I wanted to hit one more target, and I was pretty close to doing that the way I set my targets up in options. I was close to hitting target number 3, But I put this trade on in here, and we took two. So it's a very profitable trade. But when you have a reversal, you want to be able to recognize it pretty quickly. So I did not. I was about 10 cents away from. This was a trade that was more than a double in Salesforce. So I was trying to, let my winner run for the last, half of the trade. And fortunately, we had this bar, and then it was just kind of good night. So I sold this trade in here, still at a nice profit. From where I think it's in here in Slack. Yeah, 240, paid 148, but it was marking around, I think 320, 330, and literally I was 10 cents away. But you have to make some difficult decisions when you see something like this and a reversal bar and a short dated position. This position expires for me this week. So once I see a reversal, I got to get out. Now I could always restructure another trade. So, as soon as I take one of these trades off, what I want to do is put an alert back where if it was just short-term volatility, sometimes we get intraday moves and we're right back to the highs, which we did not get. But I set an alert back at 145.40, and if it retakes that level, I'm all about putting on a new trade. But there's no, this is where the management of trades that comes in, which is so important. You can't let a winner become a loser, and I think just looking at some more momentum plays. I've got a Mastercard trade on that expires at the end of the month. So this one I have a little bit more time. But if it starts to duck below and check back in here, I don't want to be in it. There's no reason to be in a short. Now, if you're in a long-term trade, that's a whole different situation. But this trade that I'm in Mastercard expires at the end of the month. If it starts to fade a little bit further, I got to take it off. And that's, again, where management and making sure that you don't have any big losers. Even if I have to take this off a little bit below my original cost basis, remember I already took a target in this trade. That's fine. So be it. So again, charting and looking for new ideas is is definitely part of what we're doing here, but it's also managing so that you don't have any heavy losers on the books, right? And if things start to change, you have to make some adjustments, and you have to trade accordingly for that. So again, looking at charts and new setups is great, but in regards to existing trades, there's a lot to do if things start to change and go back. And what was particularly difficult this morning was there was a lot of call buying in the FANG stocks, which outperformed pretty well. So Amazon, you kind of have a reversal bar forming for the day. Now, this is not necessarily a reversal bar. It's usually in candlestick charting. If you've done candlestick charting before, if you've studied it before, it's a 3-day pattern for a reversal bar. So this looks pretty ugly, right? We went all the way up to 1925. There was a weekly call buyer in Amazon, and then it completely faded with the rest of the market. So what I would watch for this tomorrow, right? We went all the way up to 1925, beginning of the day, and then just turned on a dime basically, and went the other way. So what I would watch for tomorrow, if this is going to be a true reversal pattern, reversal bar and reversal pattern, I guess, are two different things. You would see another candle that would go lower than the open here. So we haven't done that yet. It's still, as ugly as this bar looks for Amazon, it's still above all the short-term moving averages. So if it starts to duck below and closes around here tomorrow, then that this may start to cycle down a little bit. And you've got some support 1859 and further down. So I'm just speculating on what you could possibly see tomorrow. The VIX stayed pretty well bid. I was watching all three of the VIX instruments. Again, a very tricky day because you had the VIX kind of crash again to around 13. Up here is the VIX. This is VXN for the Qs. Again, very important. If you're trading mostly names that are in the Qs or even small cap names, then really looking at the VIX isn't going to help you too much. It will a little bit, but it's not really, because it's the VIX for the S&P. This is the VIX for the Qs, and this is the VIX for the small caps. But notice they all did the same thing. They all ticked up again right around 1045. We completely reversed, and Yeah, so the VIX is up to 1478. So coming back to from where we were last week, there has definitely been a change in volatility. So we're now pushing 15. So again, we'll see where this goes. This could be a nice place to buy a dip. So what I would be looking for tomorrow is I would prefer a red open, and then we can actually do something. But today, where we kind of opened in the green again, just doesn't bode well. So that's what I would be looking for. What has me very concerned. So, let me just show you this. There's a question in the trading room about some inflows going into the VIX instruments. Yeah, if you take a look at the report that I put out on the weekend, sure, there was some definite inflows going into VIX instruments last week. Uh, they gained inflows. The TVIX gained $168 million, UVXY $103 million, and VXX gained $65 million. Remember, the TVIX and UVXY is levered VIX, short term. So those did see quite a bit of inflows in it, and that's definitely an uptick in inflows in the VIX instruments. So the other thing that really concerns me is what's going on globally. This is the ACWX, which is all international stocks, everything emerging, developed. Look at what this thing is doing right now versus the SPY. This is a 5-year chart, and we're at 5-year lows right now. So again, U.S. markets are really outperforming international. So, this scares me a little bit, that the rest of the world is just continuing to move down. And you could see if we pull up a 1-year chart, very quickly, the rest of the world is moving down. So that's concerning. Something has to change here because we don't operate in a vacuum. S&P sells, not the S&P, but companies, multinational companies sell a lot of their products overseas. So if the rest of the world is starting to crater in terms of stock performance, it's going to affect us. So, I hope to see something internationally catch a bid. We talked a little bit about India performing pretty well. I was watching the EPI chart. That's one of the India ETFs, but this failed at the 200-day moving average, and that's the only emerging market that has really been able to, even get above the 200-day moving average for a little bit. This EEM looks horrible. It was fighting with the 50-day moving average for a little bit, and is back to the July or June and July lows basically. So this is this is scary. This is definitely scaring me a little bit. So, it's concerned. And if you're concerned, what do? You either hedge, you take off some trades, try to take some trades off into strength. So if we happen to get a reversal day to Tuesday or Wednesday, maybe that's your day to kind of get out. But this also looks like a pretty fresh MACD bear signal. So I think there's a good possibility that EEM could actually take out these year lows. So again, which is a little bit frightening. What did we see in terms of option activity? Speaking of international ETFs, we saw a pretty big order in EFA, which again, which I would like to see, a double bottom formed here. You can see they did some rebooking of this trade a couple times today, but let's just see what the total volume was. This was 39,000. In case you're not familiar with this ETF, it's international developed equities. So it's basically Japan and Europe equities that are in there. Here's the components of this. Nestle, HSBC, Novartis, Roche, Royal Dutch Shell, Total, BP. So you got some energy in here, you get some financials, you got some healthcare, you got some consumer names. Where's the other one? GlaxoSmithKline. I thought there was another consumer name in here, but I don't see it. Toyota's in here. It's, like I said, a little bit of Japan in here as well. So yeah, I like to see somebody coming in and putting on a new trade, looking for this to go higher. Just September 14th, so a month out, somebody's looking for a bounce in European and Japanese equities. That would be great. That would be great. I think they are getting pretty over. If you look at the 1 hour bar, they're pretty oversold. Let's see what the RSI is on this. Not that oversold. It's a 34. It was a lot more oversold here. So we'll have to see. Other names that saw some option activity today. I mentioned, all of these were right on the open. Twitter, which I've been long Twitter. I got long Twitter last week. I've been putting my analysis on Twitter about this thing stopped right at the 200-day moving average. I did not actually take any of this trade off that I put on back on the 2nd of August. I'm looking for this to go higher long term. I'm in January calls, so I'm looking for this maybe to even come all the way back up here. So if I get another big day of a rally, I'm sure I'll be happy to take a target or take some of that trade off. But it's for now. It's holding the rising 200-day moving average and doing its thing. And that's Twitter is something that we saw call buying in about a week and a half ago. Few other names that we saw today. Vive. This was all around 10 o'clock in the right around the first hour. What I would look for as well is where they start buying things on the dip the next couple of days, even though we really haven't had a huge dip, but a little bit. FTC was that's actually the wrong quantity. There's about 7,000 of these calls that went up. There were some puts that went up as well, but the calls look like they were bought. So just to update this in FTC. Just to look at the chart in this. That's been a nice name to buy on dips. I've done this. I did this back here. I got into this name. I've been in this FTC a couple times now, but the last time I bought it was here, and I think I took it off in here. And then it of course had earnings. We've hit another VPOC up here and a reversion. Let's see if it can hold 23.41. So I did start a position in that today. Like I said, I did not do much trading today. I just thought today was going to be difficult. Restoration Hardware. Let's see where this closed today. I was able to hit a target. And yeah, geez, did I not? I only hit one target in this thing? I guess so. I had a target out at 3:30. I'm in the August 31st 145 150 call spread. But look at the relative strength in Restoration Hardware, up 5%. And it looks like I just missed hitting a target. Again, another one that I just missed by 10 cents. But really, really strong. So this was nice. Instead of just talking about winners, which this is a nice winner so far so good. I did look at some trades over the weekend. I put on Alta right in the beginning of the day. It did not work, so I'm sitting with kind of a loser for now. A trade that looked good on the first couple minute bars. This is a name that we've seen some call buying, so the trade isn't dead. It did basically reverse. It was up almost 1%, finished down 1.3%. So these retail names can get going, but I did want to address this one trade that I put on, first trade of the day, and it completely just went flat on me, which is part of the, so what to learn from this? It's tough on the first couple bars because we are seeing reversals in this market. So you leg into trades, which again, I have plenty of room to add to this trade. I just decided not to do it yet. I don't want to add on a bar like that. So we'll see. I also took off some HTP. So again, taking targets in this because I think HTP also reversed. So I've hit 4 targets now in HTP, and you can see kind of a toppy looking candle. So maybe time to get out of this trade. I left the last piece on because you got to have some big winners in this game. So we'll see if it goes maybe one more day, another rip higher, and I'm out of this trade. But this was a nice trade, and this was a trade I've had on for a while now. So it's worked pretty well. I also took out another loser here. I took off January XLFs. I just don't like XLF stalling out. Maybe the financials do work. I would just, like I said, not have any big losers on the books right now, or at any time. But so getting out for a 15-cent loss stinks. But it's been struggling since I put this XLF trade on. These financials have been a difficult trade. So back below the 200-day moving average is my cutoff, and I'm out of that trade. All right, so a little bit longer video, but a lot of strategy and a lot of things to go over. This is where you really learn how to manage trades. When everything goes up, it's easy, but you've got to be cognizant of what you're doing and your risk when we start moving to the downside. So those are the things I'm most concerned about. I'd say international markets, but hey, the way this market has been going, if we start the day red tomorrow, possibly look for a reversal day tomorrow. All right, have a great night. See you tomorrow.